Welcome back. You're watching All About Stocks on ET Now. Like I promised, Paras Aidinwala is here with us on the show, and he's found two stocks that we should be investing in a market like this. Paras, thank you so much for joining us on All About Stocks. We need all the help we can get, especially in the market that we're seeing right now. Well, before I go to your two new recommendations, I want to pull up the recommendations we talked about the last time you were here on the show. You mentioned Allahabad Bank and Kiran Clothing. Allahabad Bank at that point was trading at 190 rupees. The current price is 167. It has corrected, but do you still stand by your first recommendation? Is it still a buy call on Allahabad Bank for you?
Yeah, I continue to be positive on it. I think there is tremendous value. It was cheap at 190. It's cheaper. It's even more cheaper now. It's valued at just about 3.5 times on FY13 and a price to book of just about 0.7, 0.8. So I think it looks very, very good and very interesting for the long term.
All right, still a buy on Allahabad Bank. The other one you mentioned was Kiran Clothing. Now, while you recommended that stock the last time you were here, it was trading at 750 rupees. It's up now at 838. So for those of our viewers who didn't buy it back then, would you say it's still a buy at this value?
Yes, it is, because my expectation was at that point in about 30% return from 730. So there is further scope for appreciation over the next 1 year.
All right, currently a buy there on Allahabad Bank and Kiran Clothing from Paras Aidinwala. Let's go on to his new recommendation. His value pick for this week is VST Tillers and Tractors. For those of you who are not familiar with the business, here's a quick introduction.
VST Tillers and Tractors was incorporated in 1967 in Bangalore. As its name suggests, the company is a farm equipment maker specializing in small tractors. In spite of being a small cap company with a market capitalization of only 430 crore rupees, VST is in a joint venture with the agricultural machinery arm of the Japanese auto giant Mitsubishi Corp. VST has regularly posted healthy earnings growth, with profits rising threefold in the last 4 years. As agricultural technology advances, the farm sector is expected to see higher profitability, which will translate into higher disposable incomes for farmers. And with the government encouraging farmers to buy farm equipment and providing extensive subsidies to that end, VST looks poised for significant growth in the coming years.
This company is a very small cap stock. It has a market cap of about 440 crore rupees. In a market like this, which is very volatile, where the small caps get beaten down quite often, why does it make the cut for you?
Yeah, I think it's a continuation of my theme on the agricultural side. I've been always positive on the agro-based industry. And this is a company which is an excellent play on rising disposable incomes in rural India or semi-urban India, and also a very good play on increasing mechanization in agriculture. So my sense is with a 60% market share in VST, in tillers, and a good market share in small HP tractors, the company is very well poised for a consistent growth over the long term.
Right. If we look at the sales numbers over the last year, we see that 60% of the sales have come in from tillers. Only 25% comes in from tractors. But it's that tractor segment that's been growing very strongly. The tiller segment hasn't really increased its margins. Do you think the company has the ability to retain margins with commodity prices going where they are right now?
I think it is slightly better scenario. If you look at the last year and if you look at the current scenario, clearly the business climate has changed for VST Tillers. It's only improved with commodity prices having kind of declined due to the slowdown globally. And they also used to be facing a problem of sourcing components from auto ancillaries because of huge demand coming in from automobiles. With some kind of sluggishness being noticed in automobiles, I think they would be better serviced by auto ancillaries as compared to last year. So I think with robust demand from agriculture and better ability of the vendors to supply to them, the scene couldn't have been better.
And finally, what sort of returns and growth do you expect from this stock for someone who buys it maybe for the next 3 or 4 years?
My threshold for any stock that I recommend is at least 30% over the next 1 year, and I would like to continue with that threshold. My sense is the stock has a larger room for appreciation, but let me go in for a 30% return over the next 1 year.
30% return is what Paras is expecting from that stock. That was his first recommendation. His second recommendation is a growth stock. It's also a small cap stock. It's also in the agriculture sector. This is Dhanuka Agritech. Take a look at the business. This is an introduction.
Dhanuka Agritech, a pesticide maker, was listed only on the BSE till 3 months ago. In June this year, the company listed on the NSE as well, and is also steadily expanding its presence in the agrochemical space. The company has opened a subsidiary in Bangladesh and expects business worth about 10 crore rupees from the venture in the next 3 years. Expansion is obviously high on Dhanuka's priority list, as it plans to double its manufacturing capacity at its Sanand plant. The company is investing about 40 crore rupees on the expansion and expects it to be completed in the next year and a half. Even though its business is largely seasonal in nature, the company has seen sales doubling and profits growing 3 times since 2008. For this year, despite a slow start, the monsoons have seen a pickup, which will give business a boost.
Another small cap stock, another agricultural stock. Paras is dependent, this particular one, on the monsoon. It's a seasonal business. Explain to us the kind of risk we would be taking in a stock like this.
I think it's a myth that agrochemical stocks are extremely cyclical in nature and very volatile. While yes, there is some amount of dependence on monsoon, but increasing irrigation facilities for farmers is reducing the cyclicality or volatility in the businesses of agrochemical companies. And Dhanuka has been among the older players in the agrochemical space, with its wings spread in insecticides, herbicides, and other segments within the agrochemical segment. And the clear USP of this company is its ability to source the latest molecules, the latest products from its collaborators, from its global collaborators. It has tied up with people like Syngenta, BASF, Bayer for sourcing their molecules into the country. And it is not into technicals. It's only a formulator that makes the return on capital employed even better. So I think the stock has been notching up very consistent returns in the past, and there is no reason to believe that it will not put up with its good show even in the future, if not better.
Right, Yuvraj, when you say sales have been on an increase since 2008 on a regular basis, but what are your expectations as far as returns are concerned from this stock?
I think this stock is again good for sharper re-rating. If you look at someone like Rallis India, it's available at about 13.5, 14 times on FY13 estimates. PI Industries is available at about 10 times on FY13. And this stock is available at just about 5.7, 5.8 times with a very clean balance sheet. So it would be safe to assume at least a 35% return over the next 1 year.
35% return over the next 1 year. That's what Paras is expecting from this stock as well. We're going to skip into a quick break. On the other side, to answer some of the questions that came in from you during the week, we're going to talk about stocks like Maruti and M&M. So don't go anywhere.